Knowing what is the main directional bias of the market is an important skill that every trader needs to possess. So my goal as a trader is to always stay on the right side of the market to follow the current bias. How am I going to do that? I'm going to follow the correct channel, because these candles are always part of some formation, always part of some channel. Right now we have bullish uptrend working higher, channel was identified, we have a close outside, and we expect for buyers to test the new extreme according to channel rule, which happened perfectly. So right now we expect correction or possible reversal. The shift in the market structure formed, and we have downtrend working lower, break, and the new extreme, and price action is pushing back above the EMA. So right now the bias is not fully obvious. I know that we have more of a bullish bias because we traded up, but there is no strong uptrend right now present. We are starting to go sideways. So when I see unclear bias, I just really try to follow the short-term channels and see if I can get some nice high probability setup. We have higher low here, but it's not really confirming much. You can say it's confirming the large two-legged pullback, but it's an inside bar I need to skip. And we have a break and new extreme for the uptrend, and we continue working lower. And right now we have downtrend working lower. So you can see when the bias is sideways, consolidation, I just try to follow the short-term channels. Now we can see that we are breaking the bottom trend channel line, which means we have overshoot. And I can get stronger momentum in the opposite direction or possible reversal. And because we have overshoot and we are at the bottom of the trend range, we may not get fully new extreme. Now, how do I know I'm at the bottom of the trend range? Well, because the EMA that was initially pointing up, it's suddenly going sideways, and we have move up, move down, move up, move down, and we're pushing back above EMA. So you can see this is starting to feel like a trend range, and you always want to make sure you identify the right structure. So what I have to do is I need to identify the lows and the highs of a trend range. You can see how nicely this looks. Spike up into a trend range. So what I have to do, I really have to pay attention to the short-term channels, and I have to observe what EMA does, the reaction to the EMA. Okay, we have high low here, but you can see it's closing way too far up. The bar is quite big, but it's touching the EMA, but it just feels a little bit too early because this downtrend doesn't have new extreme. So it feels a little bit too early. I'm going to be patient. Okay, I have a small break in new extreme. Uptrend played out. Can I take a failed second entry short? I cannot, because this downtrend can get a new extreme, and we are in the middle of the trend range, and uptrend played out. So when you're trading trend range, you want to make sure you want to buy low, sell high according to trend range rules. You want to be careful taking setups in the middle of the trend range, because this is where the bias weakens and it is tempting to both buy and sell at the same time. So you may get trapped. So what I'm going to do, I'm just going to be patient. And when I see this, I'm not really touching this because EMA is getting rid of these bars. This is way too stacked, way too congested. You can see even small congestion is being formed. So I'm not even looking for setups. When it is this congested, I don't even want to touch it. Now we have visual two-legged pullback. You can see downtrend working lower, break new low, new high, first entry long, pullback second entry long. And this is also triple test, one bottom, double bottom, triple bottom. Now this is a small bar, you can see only 1.5 points. And you're buying at the bottom of the trend range because we have this trend range and we also established small trend range. The price action rules still apply. You want to follow the trend line rule and the trend range rule, which says you want to buy low, sell high. So here, the downtrend played out with the break new extreme. It is a two-legged pullback and you're buying at the bottom of the trend range. So this is the first high probability setup for the day. Second entry, long and triple test. You have two reasons to enter. Personally, when I'm watching this, I like to skip this because this is just so sideways in the middle of the trend range. But you can make a case taking the chance because you're buying at the bottom of the range. You can see how tiny the bar is. You have a lot of room to get out before reaching these highs. Great setup if you're interested. I'm going to mark the short-term channels. This is what I always have to do. Okay, we have small break new extreme. So right now that we have small break new high, I'm expecting push below EMA, and I would like to see lower high or failed second entry long. Why? Well, because in trend ranges, the price action says the sellers will sell at the top and smart bulls will buy at the bottom. But I want to time it perfectly. So I want to see the push below EMA and some high probability setup. You can see how the resistance is coming into play, the support is coming into play. This is a clearly trend range structure. I'm following short-term channels, and also we have the visual aspect of two-legged pullback. Market likes to move in pairs of twos and two-legged pullback here. So I have a large two-legged pullback, uptrend new high, first entry long, and we have failed second entry long here. Now, In trend ranges, sometimes the failures may form on the opposite side of the EMA, meaning the failed second entry long may form above EMA, and that's not that big of a deal, because the bulls will get trapped buying into the top, into the main key level. But because the single bar is bullish, I cannot really sell, so had it formed with stronger bearish bar, with nice momentum, you could have considered like this. It feels a bit too aggressive, but you still want to make sure you are not thinking bullish. In fact, you're thinking about selling due to price action rules. I'm going to redraw the short and downtrend. Okay, we have small break in extreme, but I can see that from the very top all the way to the bottom, we haven't even managed to touch the EMA. Notice how strong this move down was. Not a single pullback, just a very strong spike down. So this is one clue, no confirmation of the EMA. And second clue is, notice geometric formation at the top. A lot of times this is how channels, broader channels, get established. So once I see this push down, once again not even confirming the EMA, I'm gonna select the wider channel, something like this, because I can connect these two swings at the top. Third swing will confirm it, and because this downtrend was strong without pullback and without touching the EMA, this is how you can monitor the strength of each channel inside of the trend range. I cannot sell, however, at the bottom of the trend range. Market's working lower. We have another micro overshoot. Now I'm going to redraw short-term uptrend. I was thinking at first drawing this, but this is so tiny, you know, makes sense to even draw a little bit wider like this. And we have new low, micro double bottom resets the count, first entry short, pullback, second entry short. But I have this uptrend in play. Now, if you take the second entry short, remember your stop loss goes one tick above the signal bar. You want to protect your trade by using price action structure. You cannot put it in the middle of the bar, so your stop loss would not have been hit. But I feel you need lower high. But notice what's happening here. This is important. Pay attention to this. This is what we call a breakout pullback, because this support is right now acting as resistance. Because most breakouts of trend ranges will fail. So we broke lower. This is the failed breakout. We're going back. And if this key level is going to hold as a resistance, the downtrend is going to take over and you expect for price action working lower. So you're watching how this key level is going to react. Okay, and because we traded down, downtrend needs to get new extreme. If you get nice lower high, that's a great confirmation. Now, you didn't take higher here, so this is still part of second entry short, but you can treat it sort of as a hidden lower high, and more aggressive trader can consider. Stop loss goes still one tick above the signal bar, because right now you can see the key level is acting as a resistance, and this is a strong sign for the bears. Trend line rule says we're going to get new low. Trend range rule says this is a breakout pullback, so you're expecting lower high. Now, I have a lower high here, but my signal bar is bullish, which means I cannot sell. I can only sell below bearish bar, which I get here. Now, the context-wise, lower high is a great setup, but I didn't form that well. I cannot sell below bull bar, so I could technically enter this as a double bar entry. I can wait for this bearish bar to get a trigger, and then place my stop loss above the initial bar and use this follow-up bar overall as a double bar entry. But it is quite big. This is, you know, almost 4 points big. So the risk is quite significant. For this reason, this is not fully high probability setup, but the context is perfect. Study what happened here, breakout pullback, push below EMA, downtrend is new low, and a great lower high confirmation of the second entry short context wise. If you have nice bearish bar, this is a textbook high probability setup, and market is gonna continue working lower. Okay, we can see new low played out. So right now I'm pausing my shorts, and we can see that structure is overall very much a trend range. There is no strong trend in either direction, uptrend or downtrend. So I cannot be too greedy to be looking to sell while we have a break in new low. So what I have to do, I'm gonna mark my short and uptrend. Notice I have a second entry short, but it doesn't mean anything. The two-legged pullback under wrong context is not high probability setup. I want good context. And context tells me that I have a break, new low. I'm using the channel to tell me, okay, we expect stronger correction. I don't think you want to take lower high as well, because the downtrend is very weak. Okay, if the trend is strong, you may consider. But right now we can see the uptrend doesn't have full new high, and this is very much range-like up and down. So once the trend is this weak, there may be no follow-through. More congestion, you can see completely stacked right next to each other. Just be patient, don't touch this, no trade zone. Okay, now we have little failed breakout out of this trend range. Uptrend played out with the break new high, and most breakouts of the trend ranges will fail. This congestion is just a smaller version of a trend range, so you can consider selling this. Personally, when I was watching this live, I didn't really feel the strong bearish bias just yet. I couldn't find any wider channel, but because uptrend played out with the break new high and it visually looks like a two-legged pullback, you combine it with the failed breakout out of this trend range, you can consider more congestion. I'm waiting. Okay, price action keeps working lower. I'm going to redraw the shortened channels. Notice still I follow the shortened channels to make sense of the structure. Now I have second entry short, but what is the bias? First of all, this is a congestion. EMA is one of these bars, and those bars are stacked right next to each other. You're above EMA, okay? And what is the structure? Unclear. I was looking for potentially some wider channel like this, but this is so range-like, and it's not fully confirmed. There is no third swing confirmation. You know, no clear bias. I cannot take it. I would need lower high confirmation. In a case like this, when we keep pushing lower, but I don't have confirmed channel, I need confirmation setup. You have break new extreme. Price action keeps working lower. First entry short. I have to redraw the uptrend. And right now market keeps working hard, and at this point it's obvious. We are in a larger trend range. I have to redraw a brand new uptrend. You can see always follow the channels. These channels are always present on the chart. You can see every single time you have a break new extreme, or 90% of the time, the market will pivot or the wider channel will be established, but market will give you more clues. We have another overshoot, which is overbought territory. Notice how far away we are from the EMA. Overshoot can lead straight to the break of the channel or possible reversal. Okay, you may not get full new extreme of the channel if there is overshoot, because it can generate that much stronger correction in the opposite direction. That's something to always keep in mind. And you can see we are bouncing triple top of this important key level. So sellers are really coming into the market, but because this was significant uptrend, very strong one, I'm leaning to expect new extreme. Okay, we are at the EMA, but there is no clean setup. Possible double trap, but no clear full bull bar. By the time you get bull bar, it's too big, too late. And the downtrend was in play. And now we have high-low confirmation setup. It's a little bit sideways, but I am going to market. That was my break here, but I'll be honest with you, if I was here, I probably would have entered this, because once I see such a strong uptrend, I really expect new high, even though it is a little bit stacked, a little bit congested, but the congestion is so minor. You know, I would take a chance here. And if you go for a smaller scalp, it would have worked, but if you go for a bigger one, it would have ended up failing. You can see market reverse all the way down. Why that happened? Because of overshoot and because the main key level is coming into play. That's okay. If you took this trade right here, you got stopped, no problem. There are plenty of setups. That's part of trading. This is why we put our stop loss below and above the signal bar, so we can cut the losing trade quickly and we don't lose that much money, and we can keep making it back on the next trade. So brand new downtrend was established, once again following the trendline rule. I'm going to redraw it even longer. Now I'm going to redraw the short-term uptrend. Second entry short, we are miles away from the EMA, I cannot sell. And now we have two-legged pullback. Notice uptrend played out with the break and a new extreme. And this visually looks like a two-legged pullback. First leg up, break, second leg up. At the key entry point, while this downtrend needs to get new extreme, following simple trendline rule. So this is a double trap, visual two-legged pullback. But how does my signal bar look? You can see it is bullish bar. It has decent tail at the top, but I need more bearish body. For this reason, I'm going to mark it only from context perspective, because you want to study this, because the downtrend is new low, great to like a pullback, bullish correction played out with the break new extreme, and you're at the EMA. But because the signal bar is not fully bearish, I can't really sell. And you cannot take double bar here. Why you cannot take double bar entry? Because the scalp was almost made. You want to see the follow-up bar be closer to the first one with the low, because now you can see there's a big gap and you have 1.5 points already made. You can't chase it this far down. It still would have worked, but you can see you need to follow the rules. You want to be fully objective and you don't want to cherry pick. So the signal bar unfortunately is not good. Break new extreme, congestion, and market is reversing to the upside. So what does this mean? I'm going to zoom back. Remind yourself the structure: up, down, big trend range. In trend ranges, you want to buy low, sell high. We're using the channels to time our entry properly. Downtrend working lower, break new extreme. Push above EMA is signaling the buyers coming into the market, stronger bullish momentum. Now you have so like a consolidation, breakout, pullback. So already more advanced trader can sense that the bullish momentum may be strong because you have a breakout, pullback, EMA, and this support keeps holding. But high probability setup, the easy one would be second entry long, and you have new high, first entry long, pullback, second entry long, and counting from this low, because I have new low, first entry short, second entry short failure, count reset, first entry short, second entry short failure. We have two high probability setups in one, great high probability setup, second entry short, and a failed second entry long and a failed second entry short. This uptrend is new high, and if you're more advanced, you can see that there are geometric lows working higher, allowing you for potential channel. But you don't need this wider channel. I didn't have this live at the time. I was focusing on new high of this uptrend. You can see great trade working higher, but after you can see confirmation here, you're going to widen the channel because you can see how many confirmation it gets. It aligns with the EMA. We are closing outside of the channel. So what do you expect? New high for this uptrend. I cannot go long. There is no setup. New high, first entry long. There is no first entry long because there is no break higher. Notice new high, no break above this bar, no break above this bar, no break here, no break here, and no break here. Just because there is a bull bar, that doesn't mean there is entry. I want to see that break above either one of these bars to count it as entry. So the first entry long is here, pull back, second entry long here. Of course, I cannot take such a horrible second entry long below EMA. We're pushing above EMA, so this is a good sign. We have two-legged pullback down, and because the bias is bullish based on our channel, high-low would confirm the two-legged pullback, but look how ugly the high-low formed. The first signal bar is bearish doji, and the follow-up bar, yes, somewhat bullish, but also quite stems at the both sides. Your idea to go long here is perfect, because the trend line rule tells you're gonna get new high, the bearish two-legged pullback indicated depletion, and you're using the momentum push above EMA to confirm there's a bullish bias if EMA is going to hold. So two-legged pullback confirmed, high low you expect new high, but once again, I can mark it context wise. If you have better bar here, you can definitely take. And you have second entry short failure, but once again, great setup context wise because the new high has not been reached yet. You can see there's still room, but the way it formed unfortunately is not the best. Market created the new extreme, and now it's getting way too late. You can see large two-legged pullback and market is about to close. Make sure you're always going to follow the channels. You always want to know what is the overall structure, and you can see how trend line works. Break new extreme, you expect correction or reversal. This part was a little bit tricky because we kept making lower highs and lower lows, yet it looked very much like a trend range and no wider channel fit really well, no good confirmation. So this is why you always have to be patient. Remember, you want everything to align, context, key entry point, and the setup. If you're not sure, if you're doubting yourself, don't take the setup. At that point, you're gambling. This was a tricky trade, but other than that, the structure was pretty straightforward. Great setup context-wise, but unfortunately, the signal bars were a little bit lackluster. So I'm going to wrap it up. I hope you had a good trading day. I hope you find this lesson helpful and educational, and good luck with your trading.